Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, September the 21st, the year's 2020. Let's talk trading, the lure of big pips. But first, these videos are for educational purposes only, and your results may differ from mine. Now, I'm sure you get some of the same emails that I get and and watch some of the other YouTube trading channels, and maybe you've watched their videos from other locations, Facebook, Instagram, who knows what, Twitter. And many times you see these traders talking about these big pip trades, 50 pips, 100 pips, 200 pips, 800 pips, 1,000 pips. And you look at the chart and it's like, oh, yeah, if you would have gotten in here, then price would have zoomed up to here. I mean, you would have been in for the ride. Well, as you probably know, um, that's not the way it always works out. And in fact, some of those times, those traders that have those big wins, they got big losses too. But usually they don't mention those. And another thing, what they don't do is they usually talk about back test. And as you know, if you've been following me for any length of time, to me, the only reason to back test your code is to make sure it triggers when it's supposed to. That's it. Make sure the code functions the way it's supposed to. Not whether or not the system makes any money, but does the code get you into and out of trades when it's supposed to? Only reason for back testing. But what I like to do is I run statistical analysis that says, you know, if price does this, then how many times will price do that? And you, in fact, I think on my chart on Friday, I went through some of that statistical analysis. But the fact of the matter is that unless the statistics are on your side and you take those trades, you're not going to have statistics on your side. Now, I teased you on the last video, and I said I had something for you. Um, and so what I'm going to do is I'm going to show you what that is. I wrote an indicator. It's called TROYAIFTWASL. You're an idiot for trading without a stop loss. And so you saw me pop that trade on um, just by clicking that button because I wanted to show you this indicator, and I'm going to put it out there so you guys can grab it. All it does is it looks and see for your open trades, and if any of those open trades has 0 for stop loss, it pops this out on the screen. So I hope you guys will enjoy it and use it, and hopefully you'll never see that message when you enter a trade, okay? Because you'll have your stop loss in place. But it's real easy to write an EA that instead of giving you this message, it'll put in, say, a 10 pip stop loss automatically. You could take this same code and do that, but I'm not going to do it. And I told you why in the last video, and I'll tell you again. There's too many things that can go wrong, and I don't want to be held liable saying that I used your EA and it failed to put in a stop loss and I lost a bunch of money. So it's up to you if you want to take the code because it's really simple how it works. It just loops through your trades and it checks to see if stop loss is equal to 0. It's something that's really simple. But the thing about it is, we were talking about the lure of the big pips. It's real easy to look back on the chart that says, oh yeah, if I would have gotten in the trade, I could get, like right here, yeah, I could have got all those pips. But it doesn't show you all the wiggle back and forth. And that's the thing where you can get wiggled out of a trade, um, and have a loss because maybe you have a tight um, stop, or maybe you were up 8 pips and it came all the way back down, took out your break even plus one, and then the next thing you know, it took out your, or it zoomed. So, maybe price went down, came back, took out your stop loss and did that. And so what happens? Now you start to, you, your mind starts to work and you decide not to move that stop loss up to break even plus one. And then next time you get in the trade, it comes up and then it goes down and it goes a bunch of pips against you. And then it hits your stop at minus 10. Now you're really in a tailspin. And so that's why you, instead of looking for that lure of big pips, in fact, I was talking to Walmart about this earlier today. The idea is just to be consistent, just to consistently take those couple of pips over and over and over again. Now, I think I could exit this trade with a profit if I remember correctly. Yeah, now I know I can. It just hit that double low. So let me just close that. And you see, it went away. But that's just another one of those little tools I'm going to give you guys, you fellow traders, um, just so you'll have it. And hopefully it'll be a reminder. Now, also, what I did the same thing in the exit playbook. Let me think. Did I have this? I think I might have turned this one off too. So if I put this back on, I updated the code so the next time I send out the donationals, um, you'll see this you'll see it where if you don't have a stop loss, it'll say you're an idiot. So Laura Big Pips, just remember that those big pips might look simple and easy on the chart. It's simple to get in the trade, but managing that money once you get in the trade, that's a whole different ball game. Because of course, if you need trading, investment, or financial advice, seek the advice of an accredited financial professional. But you know, you've got to have your risk management in place. You can't lose any more on a trade than you're willing to lose. If you're doing that 0.01 mini lot, yeah, you can lose 100 pips. If you have a large enough account. I mean, what are we talking? $10, right? What is it? A dime a pip. So every 10 pips is $1. So 100 pips at $10 loss on $1,000 account. But I mean, are you really going to make what you think you're going to make trading at a dime a pip? And I was also talking with Walmart. I watched a video and it told a story about how Steve Jobs was talking about intelligence. And he was saying how intelligence is really how you look at things and seeing how things are going to play out in the big picture. And he says, if you've got a map in your hand and you're in a city where you've never been, then you got to try and figure everything out. You're trying to get from A to B. But he says if you're on top of an 80-story building and you can see A and you can see B, you can see how you can get there because you can see all the roads. And the thing is, in a way, that's kind of applicable to trading. Sometimes we get so focused in that we miss out. But on the other hand, if you're focused on one pair and one method, and the statistics are on your side, then you just keep on trading. I mean, it's like a casino. They know the statistics are on their side, and that's why they let you come in and play for as long as you like, you know? Because you see, the casino doesn't have any of this. None of this at all. None of this at all. So if you can adopt the idea that when you put a trade on, you're the casino, you know, all you have to do is when the market smiles upon you is take the profit before the market takes it back. And Walmart joked with me. I said, if you know you're going to win 90% of the time, you're going to take that trade. He goes, yeah, you're going to take that trade if you know you're going to win 59% of the time. If you're going to win 6 out of 4 times, there's no reason not to take the trade. Now, the one thing is once again, money management. You have to make sure you could maybe sustain maybe 7 or 8 losses in a row because that's possible. But then again, you might go on a winning tear and get 20 in a row. But if you don't take those trades, then you can't win. You're every trade you don't take, especially if it turns out to be a winner, that's one stat that's not going to work in your favor. And let's see, here we're putting in that opening range for the week. It's going to be huge. We're at what, 187 pips in range already? Down 445 for the year. And I mean, we're 119 pips off 120 pips off the open there. And it was funny, we opened here. I was looking for a break maybe to the upside off of that weekly inside bar, but it looks like we might get the break to the downside. Speaking of inside bars, you can see here you've got a bunch of daily, weekly, and even a few monthly that are active for trading. 187 pip range. Look at this. There's a lot of pairs over 100 pips in range. I'm not sure why or what happened. Doesn't really matter. In fact, that's another difference between Walmart. He loves to see what the news results were. I just want to know if there was news. I don't want to be biased. So if I know that the numbers were good, that's going to give me a bias. And I need to eliminate biases. I have enough as it is. So I don't need any more. Here we go. Yesterday, we'd already taken out that pivot point. So there was a clear sell signal here. And you see what happened. Green rats get ready to feast. That weekly pivot, I called it out yesterday's video. You can see we took that out. And we also hit the weekly S1 here. So, one of those big picture things, statistical trade, these pivot trades. I mean, I show you these stats pretty much every day. We took out the daily, and here we took out the weekly. Yeah, it misses some of the time, but not that often. And here we have a trade right through that lower zone. Now, yesterday, I got to talking and I lost track of time, but I'm keeping my eye on the time. So traders, don't go for that lure of the big pips. Focus on your trade and how you trade, and just make sure you have that stop loss in place. Because you have to remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And new viewers, thank you. Please click subscribe, and share the video. TheRumpledOne over and